the next stage of development in the market is around those differentiated services that come with real-time clearing.
Welcome to the Bankers Masterclass series on rethinking liquidity and investment in association with Deutsche Bank. I'm Brian Caplen, editor of The Banker, and with me is Vanessa Manning, Global Head of Investment and Liquidity for Deutsche Bank Transaction Banking. And in this next chapter, we'll be discussing regulation and the intraday liquidity challenge. So Vanessa, the thing is, there's been a whole lot of regulations on liquidity and intraday liquidity in banking over the last couple of years, hasn't there? Can you give us a little bit of an overview of where we are with it?
For BCBS 248, since 2013, the banks have been working on this project. So today, Deutsche Bank is able to deliver those timestamps MT900 series to its correspondent banking customer base, which is the point of the regulation. I think what the regulation in 2013 didn't envisage was the clearing and settlement architecture change that would be needed to manage 24/7 faster payments.
Right, so basically the regulator was reacting to the previous financial crisis where we had a shortage of liquidity. So they put that in place, but then now, as well as the changes on the regulation, you've had this whole new technologically proficient world where people are interested in 24/7 banking, and that puts another pressure on it.
Absolutely. So what is required in that space is both for the clearing and settlement architectures itself, the banks and all market participants now to be able to work in a 24/7 instant real-time manner. So that whole concept of batch, end-of-day clearing and processes.
That's all history. Yeah.
That will be history going forward, as you see many of the regulators with a plan like the Bank of England to have RTGS and ACH, unified architecture, open architecture, 24/7 available for institutions and non-bank institutions in 2020, 2021. So that future is not so far away.
All right, so how far have we got now in terms of the implementation curve?
In terms of the implementation curve for Basel reporting, the banks have rolled those out predominantly in this year, as we have ourselves, and are providing that type of regulatory reporting both proprietarily through to our customers as well as through SWIFT. I think the next stage of development in the market is around those differentiated services that come with real-time clearing. So we are in the process of educating both our institutional and corporate customers about the technology, the treasury processes, and the front-to-back redesign and re-engineering that they should be considering to manage their flow in a 24/7 environment.
So Vanessa, this must, all these things that need doing, I mean, it's a fantastic technological challenge both for the banks and for corporates, is that right?
Absolutely. I wouldn't say it's just a technical challenge.
Yeah.
So what we are working with our customer base on is the following. The treasury and architectural technology that needs to be adapted to be 24/7, to be open source through API delivery. And that is something that we as an institution are doing ourselves and are supporting our customers with their ERP and TMS vendors to have those dialogues, being ready for a 24/7 environment. The second part of that development is not just technology, as I said, it's end-to-end operational processes. For any global institution or one of our institutional customers, we need to make sure that we have re-engineered our processes, procedures, and client engagement in a way that will reflect a new environment of 24/7. So batch end-of-day clearing, end-of-day processes, how we have run ourselves as an institution is under review, clearly, and we are working with our customers to rethink their treasury processes.
Because in a way, what you're doing is you're taking the regulation, you had to comply with the regulation, but actually, at the end of it, you're saying, well, what can we offer in a service that actually upscales the quality of the service that you're offering?
So how we use the changes we had to make to comply with BCBS, for example, is the following. We use the data that we have sourced and built to drive operational efficiency conversations with our institutional corporate customers, because cost, transparency and STP remain the most important topics with our customers in flow management. So that is what we use the data for today, is discussing customers, their payment strategy, the quality of their payments, payment substitutions between high value and low value, and how they can be more interoperable, more secure, and get better reconciliation and better individual data and timestamps.
Okay, that's a big improvement, and we'll come back and talk about virtual cash management in just a minute.